All right, let's dive right into this explainer. Today, we're unpacking something pretty incredible. We're looking at how Lam Research is physically building the infrastructure for the massive artificial intelligence boom. When we talk about AI, we're usually talking about software, complex algorithms, or maybe the finished chips themselves. But today, we're going to look at the massive, real-world machines that actually make those chips possible. Before we even touch the complex financial metrics or dive into earnings reports, we got to ask ourselves a really foundational question. How exactly is the abstract concept of AI physically manufactured? Because let's be real, AI doesn't just float up there in the cloud. It lives on intensely complex silicon wafers that require literal atomic-level precision to build. So here's our roadmap for today. We're going to hit the AI hardware supercycle, Lam's critical tech advantage, their record-breaking financial momentum, the services and shareholder returns, and finally, navigating supply and geopolitics. Okay, part 1, the AI hardware supercycle. Let's get into it. Check out the sheer scale we're dealing with here. During their Q3 2026 earnings call, Lam's management team bumped up their spending forecast for the year to a mind-boggling $140 billion. Projections from their customers have just moved higher across the board. I mean, that is a truly breathtaking amount of capital flowing directly into physical infrastructure. Now, to really wrap our heads around why that $140 billion number matters, we need to talk about WFE, or wafer fabrication equipment. If the AI boom is the new gold rush, WFE, that's your literal picks and shovels. We're talking about the multi-million-dollar machinery required to build advanced semiconductors. Put simply, you can't have AI data centers without advanced chips, and you definitely can't have advanced chips without WFE. Moving on to part 2, Lam's critical tech advantage. So right now, there's a $40 billion 3D NAND conversion cycle happening. Because AI needs massive, massive data storage, the whole industry is hitting the gas pedal. They're moving from 100-plus layer bases, transitioning super fast into 200-plus layers, and pushing toward 300-plus layers by 2027. It's kind of like building a microscopic skyscraper. The taller it gets, the incredibly harder it is to engineer. Here's where it gets really interesting. As these memory chips get taller and way more complex, they lean heavily on Lam's technology. Think about it. If you're building a 300-story microscopic skyscraper, you have to drill incredibly deep, perfectly straight elevator shafts. In the chip world, that's called etching, and Lam commands a dominant 45% global market share in etch equipment. Plus, they hold a very strong 17% share in deposition, which is how you lay down the materials. They're essentially the master architects of 3D scaling. And they aren't just sitting back on their heels either. They're plowing 11 to 15% of their revenue right back into R&D. That is literally billions of dollars. They're rolling out cutting-edge stuff like the Akara conductor etching platform and the Vector TOS 3D system, which, by the way, is absolutely crucial for the advanced packaging and high-bandwidth memory that AI accelerators are desperate for right now. They're even using AI process control within their Sensei platforms to make the manufacturing process smarter and way more efficient. Okay, part 3. Record-breaking financial momentum. Let's look at the numbers. The momentum here is honestly undeniable. We're looking at a 24% jump year over year, climbing from $4.71 billion in Q3 2025 to a record $5.84 billion in Q3 2026. This isn't just a slow incremental climb. It's a massive leap fueled directly by that AI-driven demand we just talked about. And they aren't just moving more machines. They're wildly profitable while doing it. Their operational discipline pushed gross margins to almost 50%, which hit right at the high end of their own guidance. Operating margins hit 35%, and they delivered a record diluted EPS of $1.47. It just goes to show, Lam isn't only capturing market share, they're managing their global supply chain with some pretty incredible efficiency. Which brings us to part 4, services and shareholder returns. Because, Lam doesn't just sell a multi-million-dollar machine once and then walk away. Management recently pointed out that their customer support business group just posted its first ever $2 billion plus quarter. $2.1 billion, actually. Think of it like selling someone a high-end printer and then supplying the ink and maintenance forever. As these fabs run at maximum capacity for AI, they need spare parts, they need maintenance, they need upgrades, and that means steady, high-margin, reoccurring revenue for Lam. In the real world, this means they're monetizing a global base of over 100,000 installed chambers, and they're doing it with some seriously cool next-gen tech. They're deploying what they call Dextro cobots to perform highly precise, automated maintenance on the tools themselves. Combine that with their data analytics, and they're ensuring their customers' high-capacity fabs keep running seamlessly. That in turn secures lucrative, outcome-based uptime contracts. All this operational success, it generates a mountain of cash flow. They actually returned 139% of their reported free cash flow recently through aggressive buybacks, spending about $800 million on share repurchases, and keeping up an 11-year streak of dividend growth. With a really safe payout ratio sitting around 18.5%, they've got plenty of runway to keep rewarding shareholders while still funding all that massive R&D. Finally, Part 5, Navigating Supply and Geopolitics. Because no supercycle is without its friction, right? Looking at the geographic breakdown, China is still Lam's biggest single market, making up 34% of revenue in Q3. Now, while that is down a bit from previous quarters, and places like Korea and Taiwan hit record levels at 23% each, that 34% is still a very significant revenue exposure in a complicated global market. So you have this stark contrast that analysts have to weigh. On one side, you have the massive tailwind of global WFE spending driven by the AI revolution. But on the other hand, you have the very tangible headwind of tightening U.S. export restrictions on advanced semiconductor equipment. Management has already said recent regulatory measures cost Lam roughly $200 million in revenue. So these are two massive competing forces acting on the business all at once. To handle this shifting terrain, Lam is taking physical action. They are heavily expanding their manufacturing footprint around the globe. They're ramping up a huge second facility in Malaysia and making major lab-related investments in the US and Taiwan. By spreading out their manufacturing base, they're working to ensure supply chain flexibility and de-risk themselves against localized bottlenecks. So as we wrap up this explainer, I'll leave you with this final thought. We are watching an unprecedented wave of technological investment literally crash into an increasingly complex geopolitical map. Will the completely unstoppable demand for AI compute ultimately transcend these global boundaries and constraints? It's really the defining question for the entire semiconductor industry right now. Thank you so much for joining me to break this down, and keep learning.